Hello, this is Jamie Englebert with Englebert Financial Advisers, and I'm reaching out to you today because you know what time it is. It is tax time. So let's talk about some of the important things that we need to know. First things first are 1099s. Who is going to get a 1099? If you have a taxable account and you have more than $10 in dividends and interest, you're going to get a 1099. Also, if you're somebody who has an IRA and you've taken money out for the year, you're going to get a 1099-R in the mail showing that you took that distribution because you're taxed on it. So when are you going to get these? Let's gauge our expectations, because every year I feel like custodians send them out a little bit later. And the reason why they do this is because they are trying to avoid the corrected 1099. And if you've gotten one of those in the past, you know, it's just kind of annoying because you thought you had it figured out. And then they're like, oh, wait, we've made a correction. So to gauge your expectations this year, Charles Schwab is going to be sending out the first wave about mid-February. So there's no need to go looking for them anytime sooner. February is when you'll want to keep your eyes open for them. They're going to be coming to you either in the mail or online, depending on how you've elected to receive them. So what you can do is log in to Charles Schwab if you have a retail account with us, and you can set your delivery preferences to either online or paper. If you don't do anything, it's just gonna come the same way that you got it last year. And this goes for any custodian. If you have a brokerage account somewhere else, same thing. You can either log in and get it, or you can get it in paper form as well. I don't know about you guys, but the Postal Service can be a little slow sometimes. And in this day and age, people want things right away. So you might want to log in and just opt for that online, and then you can get it a little bit quicker. All right, let's talk about the new contribution limits for 2024. The government raised them, which is great. So if you are in a 401k, 457, or 403b, which are like your standard employer-sponsored retirement plans, if you are under the age of 50, you can contribute up to $23,000 in 2024. If you are 50 and over, they let you put in a little bit extra. They call it a catch-up, and that is $30,500 for this year. For IRAs, if you are under age 50, you can do $7,000 contribution. If you're 50 and over, $8,000. So why do they raise these limits? They want you to save for your retirement because it is important. So let's think about if you maybe got a raise, or, you know, you can increase your contribution limits through your employer plan. But also think about this. If you're somebody who has a giant pile of money stocked up in your checking account, but you did not max out your employer retirement plan, maybe you're saving in the wrong bucket. So think about that, because the more money that you contribute to your retirement plan pre-tax, the more tax benefit it is to you. So it's more efficient to save your money in your retirement plan than it is to just let it build up in your checking. So think about that when you are saving up. Did you know that you can still make a 2023 IRA contribution up until April 15th of this year? So let's say that you go to get your taxes done, or, maybe you're trying to do it yourself online. You can look to see if you would have made a contribution, would it help your tax situation? If the answer is yes, and you have an IRA, you can make a contribution for 2023. So that's something to consider when you go to do your taxes this year. And heads up, April 15th is on a Monday, so I wouldn't wait. If you're somebody who's trying to make this kind of contribution, get on it. All right, so here's kind of the checklist of what you want to look at. I say get your ducks in a row. I keep a tax file, and as the papers start rolling in, I just keep dumping them in. And then probably around the beginning of March, I start looking at it and I think, okay, am I missing anything? Get your ducks in a row. Are your 1099s there? Your W-2, if you have income, you'll have that piece of paper. If you've made like a charitable donation, or you did some sort of like real estate purchase or something that would affect your tax situation, gather all those documents. Next, I always say, Work with a professional. They know what they're doing. It might cost you a few $100s, but in my eyes, it's worth it because you know it's getting done right. I mean, there's also plenty of, excellent online softwares that you can use to file your taxes and that type of thing. I just always caution people, when you're sending information, just be careful about who you're sharing your social security number with and that type of thing. When you're, if you are working with a professional CPA and you're sending statements and stuff like that, make sure they have a secure portal so that when you're sending your statement with your account number on it, it's protected and safe. Another thing to do is consider the tactics to reduce the taxes that you owe. So again, if you have money building up in a bucket that isn't making sense for you, like a checking account or a savings account, and you're not maxing out your employer retirement plan or your IRA, put money in so that you can max it out. It's the best tax benefit for you. And lastly, stay calm. There is no need to panic. We often get a lot of phone calls. Oh, I have an appointment with my CPA tomorrow, and I'm not sure if I have everything. And not to worry, we can get those things to you. But what I would encourage is that you wait until at least March to meet with your CPA if you're somebody who works with a professional. Because like I said, they have kind of delayed the sending out of 1099s and that type of thing. And we want you to make sure you have all of your items so that you're ready to file your taxes. And that's all we got for this meeting. So if you have any questions at all about taxes or anything else, if you're saving in the right buckets, please reach out to us. It was good seeing you. Talk to you soon. Bye.